This evening, there's been big relief for partnership firms and family offices in the new income tax bill, which has been tabled in the Parliament today. The adverse alternative minimum tax proposal has also been dropped in the latest version. My colleague Shrimi, who's been tracking this relentlessly, now joining me live with more on the story. Shrimi, take us through all of the crucial changes that we're going to be seeing in the income tax bill.
Yeah, certainly. So, it's 600 plus pages, the fresh version of the new income tax bill, and it was introduced by Finance Minister today in the Parliament and the Lok Sabha. And some of the key amendments as we, continue to decode the bill, because it has so many provisions. So what we have so far found that the adverse alternative minimum tax, the AMT, it has been dropped in the final version of the bill. So, of course, there is a huge relief to limited liability partnership or any family offices who are actually operate as partnership firms. As you remember, in the draft proposal, there were confusion around that the AMT, the minimum tax proposal, has expanded the scope of, the tax provision, and there will be all the limited liability partnership will be the part of that scope. Not now, the government is clarified that in the final version, saying that there would not be any capital gains tax on limited liability partnership, and that is reflected in the final version of the bill. The second important point here is what we understand in the latest version is that government maintains the status quo on the loss carry forward provision. Now, this is very interesting again, because the Select Parliamentary Panel actually proposes that you should introduce beneficial ownership concept for loss carry forward provision, but that was not accepted. And in fact, there were no clarity in the final version. The third important aspect is, of course, on the associated enterprises. Now, there were, certain ambiguity on the part that what will be the threshold of the shareholding in terms of associated enterprises. So that clarity has also come in the final version. What the bill is now saying that whatever the shareholding limit must be met at any time during the financial year. Earlier, it was not clear where that requires in the beginning or during the financial year. So that was also clarified. Apart from that, several select panel recommendation has been accepted, including that anonymous donation and the TDS refunds, etc.
Right, Shrimi, thank you so much for bringing us that update. We'll continue coming to you for the key developments. Remember, this is as the new income tax bill has in fact been tabled in Parliament. Moving on, let's take a look at how the markets